actually did everything I look for in the setup. Right location, right pattern, right confirmation, and still lost. So the question is, was the trade wrong, or is this simply the cost of doing business with the market? Let me show you exactly what happened. This is PLTR on the 1 minute chart, and the market opens down here, and for 2 hours trend all the way up here, eventually bringing price under yesterday's high. So this level matters because prior highs and lows often act as areas where the market can react. Now, when price reaches a level like this, one or two things usually happens. Either the market breaks through the level and keeps going higher, or it fails rotate the other direction. So naturally, this becomes an area where I'm paying close attention to structure. And this is where the setup starts forming, right under yesterday's high. Price puts a double top here, 2 pushes under the level, and both reject. After those pushes fail, the market begins compressing. You can see the candles getting tighter, and the structure start looking like a bear flag under resistance here. This is a situation I like to watch, because when markets compress under a level like this, eventually they tend to break one direction with momentum. Now, the key structure I was watching was this trend line here. You can see it had multiple touches, like it had touches from down there to here, touch here, touch here, touch here. So when a structure like this finally breaks, it can trigger a move in the opposite direction. So my focus was simple. Wait for the break, then react. And the break happens right here. This candle closes below the trend line. Clear break of structure. So from a rules perspective, this trade qualified. The location was correct. The pattern was here, and the confirmation was here. I entered the trade short. But after the break, the market simply didn't continue lower. Instead, price started pushing back upwards. The next candle moved against the position. The follow candle continued higher. And at that point, the market was already showing lack of downside momentum. Eventually, price pushes back to the structure, moved higher. And then the trade ended up being a full loss after an hour and a half right here. Now you could ask, why didn't you exit when the structure broke on the opposite direction like here? It's a good question. But for right now, I'm entering the trade and then walk away and come back later, because I think it's less emotional to just hear and babysit your trade. So I'm not babysitting my trade. That could be something to be changed in the future to minimize losses. I'm working on that. I'm tracking and studying it. So, but right now, this is what I'm doing. So the key lesson in today's trade is, just because a trade loses doesn't mean the trade was wrong. When you look at this setup objectively, it actually had everything I look for. it formed under resistance, which is the yesterday's high. It had a pattern. It broke the trend line, the touches, they had multiple touches, and the entry came after a clean break. From a process perspective, the trade made sense. The market simply didn't follow through. And that's the part of trading. So now I'm going to leave you guys with this. Trading is a game of probabilities, not certainties. You can have the right location, the right pattern, the right confirmation, and the trade can still lose. Because in the end, the market decides what happens next. The only thing we control is our process. And the job is simply to keep executing that process consistently. And always process over profits and discipline over dopamine. Thanks for watching.